sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible, that way we can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section below and we'll do that together. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, let's check our open positions. I wish the Tesla put spread got filled yesterday. It did not, because I know Tesla's up today. Netflix, trying to get to 82. Right now, marks 125. We're up $40 on that. No worries there. EFA, down slightly. What are we down, like $10? No worries. These are both March expiration. We got plenty of time till then. Short call on the semi for March as well, trying to get to 27. A little bit underwater, down $73. But don't worry on that one as well. We'll figure it out. And XBI still down, up slightly today, but I think we're short the 85 and long the 90 call. I think we're right around 90. So we got 18 days till February expiration. We'll have to start trying to roll this one again to buy us more time, all right? But what's today? Today's the 30th. Not till maybe the end of this week, early next week, okay? Cool. Let's start off with, we'll get to Tesla at some point. Maybe it'll sell off during the day, but let's go to UPS first. Post earnings down 8%. We'll also look at FedEx. Even though FedEx does not have earnings today, there should be some good ping action on FedEx. I haven't checked, so I don't know. So earnings were this morning before they open. It wasn't a great quarter, down 8%. We'll see. Chart-wise, it's a little early, just because we have this very long channel over the past 2 years forming. It could continue down lower to, I don't know, 120, 117. I think 120 seems fair, 125. But right now we're at 145. So can this continue to fall? Yes. There is support right here around 143. So between 143 and 144.90. So it could be bouncing right here and continue up. But if it breaks down below here, we've got some room to fall. So keep that in mind. On the put side for March expiration, liquidity is okay. You want to sell the 135. This one's not bad. I mean, 4% yield, PE 16. I don't know if you'd need to sell the put spread here. Up to you. I've got, $13,500 to make it cash secured. Otherwise, sell the spread, sell the 135, buy the 130. That makes it only $500 to sell the spread. 126 minus 62 divided by 2 divided by 500. 6.4%. That's not bad. I'll make a note of this one on the put side. Just be wary of downgrades coming up in the next couple days. On the call side, if you like that, the 155, 160, sell the 155, buy the 160. The 155 is a little close. 96 minus 39 divided by 2 divided by 500, 5.7. You're better off selling the put side. Okay? I'll come back later. Let's look at FedEx. FDX. They're down 2.5% because of UPS. No other news. Their earnings are March 21st, so maybe that's the move to make. Sell puts on FedEx. Interesting here. So post earnings, FedEx is down. Got a couple bounces here at the 200-day, and now it's selling off again. And this is purely because of UPS. Next stop for support is back here from April of 23. Say around 231. So as long as your put that you sell is past 231, You'd have to sell the 220. The 230 is too close. I'd skip this one. Very close, but no cigar. Moving on. Let's look at Pfizer PFE. Finally, earnings on Pfizer. Looks like we've got red on both sides, so not a big enough move to make it worth it on the option selling side. Looks like they've opened up higher and sold off. Let me pull up the chart here 1 second. So gap up, selling off. This is going to be a nothing. Skip the put side and call side at the 30. Skip the call side. Let's move on. Johnson Controls, JCI, post earnings. Down 5% or so. Here's our chart. Is this earnings? Hold on, what's it? Earnings were the 30th before the open. That's today. This little E here doesn't make any sense. There's no way they had earnings December 13th and now earnings again January. I don't know if that's accurate or not. Anyway. No clear direction here. Maybe sell the put side. You'd have to sell 47.5. We've got no volume down here, so it's too liquid. Call side, you want to skip. You'd have to sell at 60, and your spread is 530. Know where you're getting filled on that one. Next, Cleveland Cliffs, CLF, up 2.5. Not bad. Call side, you have to sell 22 and buy 22. You technically would want to buy 23. It's a $100 spread. You're not going to make any money. 25 minus 13. Divided by 2, divided by 100. It's 6%. If you got a really small account, it's a waste of time. You're only going to make $6 minus commission. Volatility is not that high. Actually, if anything, sell the put side. Put side, if you sold the 17, just the put. I don't think you need to sell the spread. Sell the 17. Where's 17 on the chart? 17's right here. Awfully close, but remember this is post earnings now. And this thing doesn't move as much. This one's interesting. I think we'll pass though. Moving on, Schlumberger SLB down 10% today, and it's not an earnings move, so I didn't remember what was in the news. Earnings are April 19th, so that's good. Insider selling. Interesting here. This one's very interesting. Great ascending channel. So a lot of momentum to the upside. Let's take a look at the put side here. If you sold the 42.5, I think we'll do this one. Hold on 1 second. 2% dividend. PE's 18. Next earnings are on the 19th, so we got plenty of time. If this is just pure insider selling, that doesn't really mean too much. This is Aramco's lower capacity targets spending cut concerns. Okay, I'm going to sell one at the 42.5. Where's this on the chart? 42.5 is right about here. That seems fair. This trend does look like it's kind of breaking down, but it's not bad. It's just I'm gonna sell one, not a put spread, just the put. If you want to sell the put spread, sell the 42.5 and buy the 40. Let's do the math on it. 42 minus 18 divided by 2 divided by 250. It's almost 4%, but I was gonna sell the put straight out. Sell one March 42.5 put. Limit 44. Receive a credit of $44. Preview this. Just so you know, I'm gonna need to make this cash secured $4,250 to make it cash secured. Okay. Sell one March 42.5 put. 44 limit to open. Receive a credit of 44. We'll send that one out. It may get filled during the show. If so, we'll do that together. Interesting. I don't know. Down 10% seems awfully high. Interesting. Okay. Good bounce off the 200 day. If you sold calls in the last 2 days, you're out of it this morning. Moving on. GM, post earnings. I think they had a good quarter, yeah. Up 6%. Already selling off, though. All right, let's take a look. So, yeah, we have this descending trend line. High, lower high, and now lower high again. This sell-off makes sense, but we may have missed it already. On the call side, it's a little too late to jump in on this one. If you sold 41 and bought 43, what do you get? 38 minus 15 divided by 2 divided by 200, 5.7. That's not bad. 41 on the chart. 41's right about here. Pass on this one. Close, but no cigar. 41. Yeah, this one's too... This one is relatively cheap right now, so we want to sell things when they're expensive, not when they're cheap. Just looking at the pricing here and the volatility that's priced in, it's too cheap. This is what happens when you have a post-earnings move. It is what it is. Moving on. Halliburton, HAL, down 5% today. Earnings are April 23rd. No news. Interesting on this one. Same thing like Schlumberger. Volatility's okay on this one. On the put side, sell the 32. The 31's a little too far out to make it worth it. You could sell the 32 and buy the 30. What do you get there? 42 minus 18. Divided by 2, divided by 200, 6% there. You can sell the put spread here, 32. Or just the put. Where's 32 on the chart? 32 is right down here. That seems fair. If Halliburton has a continued move down, I don't know. Interesting. I'd rather stick with Schlumberger right now. This one's not bad either. You can make a case for selling the put side at the 31, was it? Yeah, that seems fair. I'll keep an eye at the next couple of days, okay? Next up, Citi. My least favorite bank. I think they got a double upgrade today. Today's the 30th. I don't know by whom, but they got a double upgrade by somebody. Earnings are April 12th, so plenty of time till their next earnings. Had a big move up. That's continuing now. Next spot for resistance is right here at 57.50 or so. Yeah, resistance is right here at 57.50. So if you want to sell the call side, get past 57.50. You'd want to sell 60 and buy 62.5. 60 is a little close, so 38 minus 15 divided by 2 divided by 250, not worth it. Don't sell the call side here. Let's look at, I think, Goldman Sachs. They got an upgrade as well. Maintain it neutral. Low volatility. I think we're going to skip this one right away just because. Let's look at JetBlue, JBLU. Post earnings here. Down 3.5%. Okay. Here's our chart. Very ugly chart. Kind of in no man's land. You have overall a downward momentum. That's not good. But also we do have this upward momentum happening right here in the short term since October. Hold on. Does have some heightened volatility here. Obviously for the Spirit JetBlue deal that's going on. Put side, you'd have to sell the 4, and you don't get paid for it. On the call side, you'd have to sell. Skip this one. The 6 is way too close to sell, and the 7 is too far out. Let's look at Spirit, SAVE. You could sell call side 10, sell 10 and buy 12.5. What do you get? 50 minus 37 divided by 2 divided by 250. 2%. Boo. Skip this one. We'll look at Block next. Ticker is SQ for Square. Upgrade today at BTIG, and some analyst said something. Earnings are February 22nd, so we're less than a month away till earnings. You can see volatility starting to tick up here. IV rank is 63. This is all because of the approaching earnings and just more movement in general, okay? So we had this big move down, then this big move up. This move since the bottom in October, it's gone from 40 up to 80. It's doubled. The price doubled in 2 months. That's cuckoo. Good liquidity here, I know that. And these are very expensive. So if you sold the 55, you got 88 bucks. That's really expensive. That's good. But just keep in mind, let's look at you have earnings right here. And slow. So IV is heightened here. Call side, if you sold 82.5 and bought 87.5. 166. minus 106 divided by 2 divided by 500. 6% right there. That seems very fair. I don't know if there's any deal to be made. The 82.5, right? 82.5 on the chart. $82.5 is right here. This seems awfully close considering how far our expiration is, and you have to go through earnings as well. I think this one is not worth it, even though the prices are high. Whirlpool, WHR. Down 6%. Ugly looking chart here. $6 dividend. Interesting. Not crazy about the call side or the put side here. Maybe, if anything, you could try to sell the put side. Liquidity is bad. 15-cent spread here, 15-cent spread here. Pass. PHM. Think this is earnings? Yep. Up 1%. Maybe nothing here. Oh, wow, what a chart. From 37 up to 107. What the hell? All right, cool. Looks like it moved up to big time to all-time highs, and it's already selling off. That makes sense. Let's look at the call side. If you sold, nothing. To a liquid. Moving on. IBM. I know IBM had a monster run. Looks like it's chilling out now. Look at this big spike in volatility, even though it's post-earnings. Huge move. Interesting. Call side. If you sold 200 and bought 205, these are not very expensive, so let's just do the math really quick and then move on. 88 minus 49 divided by 2 divided by 500. Yeah, 4%. Skip this one. Okay, some follow-ups. Tesla's first, TSLA. We missed the put selling here. Close. So, right after earnings, we're looking at selling the put side. We tried yesterday to sell the puts. Didn't get filled. Rallied up during the day. And then up again today. If you were able to get filled yesterday, you're probably already out of it. So, congratulations if you sold puts yesterday. I, unfortunately, did not get filled. So, missed it by a hair. I wouldn't sell puts right now anymore, although it does have this gap to fill. We do have resistance at 205. So you could try to sell. Let's see, if you sold the February put side and get in and out really fast. Gee golly, if you sold the 177.5 and bought the 172.5, what do you get? 157 minus 97 divided by 2 divided by 500. 6%. $177.50. Nah, let's skip this one. We missed it. Okay. Next. Wayfair. Keep looking at this one. Down 4% today. Earnings are on the 22nd. We're getting too close. We're still in this wedge pattern. Ascending trend line here. Descending trend line here. No clear direction. We take Wayfair off the list. We're getting too close to earnings at this point. SoFi, SOFI, had earnings the other day. I think we're hoping for continued movement up and then selling the call side, but looks like we're not going to get it. And if it does continue to move up slightly, it's not going to be as expensive. So we'll take SoFi off the list. Let's look at Intel INTC. Just trying to sell. Any downgrades yet here? Nothing yet. We're now 3 days past earnings. We're waiting for some downgrades. If we can get a downgrade or something, then sell the put side. But we're still a little too close to sell the put side. Can catch support. This could be support here and then move back up. If not, we got to wait for it to go all the way down to 40. It's kind of a moment of truth. It's a coin toss on this one. Yeah, up to you. This could be the support right here, absolutely, and can continue to move up this way. And so you'd want to sell your puts now, or the next spot for support is at 40. You got support between 40 back here at 40. Let's say 40, 70, and then right here at 40.13. So let's just say 40 in general as the next spot to sell puts. And then you got a whole bunch as a safety net from here at 37 and the 200 day. So by 37 for sure, getting a bounce. That's just a little early. We're gonna keep Intel on the list for March. You'd have to sell 38. Great liquidity here. The 38 is right. 38's right about here, and that seems very fair. I might actually. This one's really tempting. 38 is right here, and that's. Man. I gotta wait. Gotta wait on this one. Okay? Close. Alright, what time are we at? We got a couple more minutes here. Let's look at the list. Go to our IV rank scanner, and we will sort by volume. Earnings for NVIDIA, IWM. We're going to skip, waiting for it to get to 210. We have AMD after the close today. SoFi we already looked at. Pfizer was this morning. Maybe we'll go back to UPS. Amazon is coming up. Microsoft today after the close. China. Google today after the close. Apple this week. We've got the Fed meeting today and tomorrow, so let's keep that in mind too. We'll get some good market action, and we got the jobs number on Friday, so this is a good week. This is fun. UPS we're going to come back to. Nucor, I think they had earnings this morning. No, yeah, Nucor had earnings, but not this NU. Google, that's right. Meta on the 1st later this week. Boeing tomorrow. We'll follow with Boeing tomorrow. Intel is on our list. We'll keep an eye on it. Earnings for all of these guys. Earnings as well. Cleveland JetBlue we already looked at. Coinbase on the 15th. Emerging market ETF. Let's take a look. I know we're in the EFA. EEM. We traded this one. Why did we trade this one? Did we sell the puts over here? That's right. We sold the puts back in mid-January on this. It moved up, made our money. We got in and out really fast. Right now, though, it's not as obvious. So we have this downward movement here. We have this upward movement here. We sold the puts here because it had this upward movement. Right now, it's literally dead center. There's no clear direction. If you want to sell a Condor, sure. I don't. So hold on this one. Starbucks 2 day after the close. DraftKings on the 15th, 2 weeks out or so. XBI, we're stuck in that one. Looks like it's down today. That's great. The K-Web. Let's take a look at the K-Web. We haven't looked at China in a while. Let's also look at oil. K-Web is going down. I know. We tried to sell puts on, what was it, FXI the other day, and missed it by a hair as well. This thing is probably going to continue downward, so I wouldn't sell the put side here, but it's also not the right time to sell the call side, so weird spot. Let's look at USO. As of this very moment, there's been no U.S. response in the Middle East, so we're holding on that one. Again, I wouldn't sell call spreads on oil. Maybe sell a put here. Liquidity is our issue. Let's look at XOP. XOP. Similar chart. Hold on 1 second, sorry. Not showing a lot of volatility here, which is weird. You think this would be very volatile right now. So bizarre. Yeah, it's right though. This is not. These puts are not very expensive, so you wouldn't want to sell this here. But considering what's going on in the Middle East, I'm surprised. Very surprised. It just doesn't make any sense, honestly. USO. All right. Interesting. So this is the OVX. This is the crude oil volatility index. So this is like the VIX for oil, and so this is so bizarre. You would think with everything going on in the Middle East, the VIX for oil would be a lot higher, and it isn't. And that's why all this stuff is so cheap. So at this point, what makes it very hard to trade oil is you don't want to sell the put side, because if this goes up, these puts get more expensive. And you don't want to sell call spreads, because if something does go down in the Middle East, oil's going to go up, and your call spread on oil is going to get run over. So the oil market, just in general, as far as volatility goes, is very mispriced, and not in a good way. If anything, and I know this sounds crazy, which I don't recommend at all, is maybe buying calls in USO. Is that the right move? Silly. If you bought the 80, man, I don't like buying calls. I don't like buying options in general, because it's a loser's bet. So weird. Oil is mispriced volatility wise, so let's just skip it. Cool. Fascinating. It's very interesting. XBI. Already looked at that one. Next gen. Pacific Bioscience of California. Check out VRT. Up 4%. It's one hell of a chart. Earnings are on the 21st of February, so we're a little close to earnings. A little too liquid on the call side. You'd have to go all the way out and sell. A lot of volume here. You'd have to sell 65 and buy 70, so a lot of people are selling the spread right here. They're selling the 65 and buying the 70. A lot of volume. That's interesting. On the put side, we got a lot of action at the 50, but you'd want to go out to the 45. 50's too close. Where's 50 on the chart? Yeah, 50's too close. You'd want to go out to 45. Skip this one. Earnings and earnings. Upstart has earnings. Qualcomm tomorrow after the close. Match Group today after the close. JD, let's check out JD. Yikes. You can make a case for selling the put side here, but I wish we get down a little closer to 21 and change. Put side, March. Yeah, they're slightly expensive. When are earnings? Earnings are March 7th, okay. We'll skip this one. Walmart on the 20th. Carvana, 22nd. We're a little close to these guys. IBM. We looked at IBM. It's still got some volatility priced in, but I think the move's been made on the call side. Oxy. Enphase, no. Let's take a look at this one. Cura Oncology. Kura. Earnings on the 29th were exactly a month away. We do have a huge spike in volatility, which you can see in the chart here. Let's take a look. All right. So, going along normal chart pattern, then a huge jump, and we've had a volatility for the past 4 or 5 days. That's going to make the options more expensive, which means we want to sell them. So right on the right track. Liquidity is bad on the call side. On the put side, bad. We got 20-cent spread here. Close, but no cigar. One more page, and we'll go back, revisit UPS, and call it for the day, okay? Shopify, the 13th. ARK. Let's take a look. ARKK. Volatility's creeping up a bit here. Not anything crazy. Here's our chart. And again, this chart is no clear direction, so that's kind of a thorn in our side. Good liquidity here, though. Put side, if you sold 41. These are slightly expensive, but not by much. 41 on the chart. 41 is right about here. For March expiration, 45 days out, that's not bad. That seems very reasonable. You're not getting a great deal, but it seems everything's fairly priced here. There's no edge. Call side, if you sold 54, That seems fair. 54 and buy 57. So that's a $300 spread. Let's do the math. That's 60 minus 30 divided by 2 divided by 300, 5%. Like I said, this thing is fairly priced. There's no edge. It's not a great deal, and it's not. It's right on the nose where it needs to be. 54 on the chart. 54 is up here, and like I said, yep, that makes perfect sense. That seems very fair. You'll get a little bit of resistance as it gets up here to around 53.50. So again, this thing is perfectly priced. Okay? No edge. Skip. Earnings. Snowflake on the 28th. That's a month away. TNA Roblox on the 7th. Zim, plug, no. Newmont, I love Newmont, on the 22nd. Let's take a look at Newmont, NEM. We should have gold moving after the, well, actually, all markets in general should be moving after the Fed decision, but usually when the Fed talks, things like the dollar move, interest rates move, which affects gold, so gold will move, and Newmont is a gold play. Let's take a look. Earnings are February 22nd, so 3 or 4 weeks out. Doesn't show much volatility. IV rank of 50. Here's our chart. Put side looks very interesting. Hanging out here, could continue back up. If not, it'll break down to support at 31. Lots of support at 31. Between 30 and 31 is a great amount of support. Maybe even at 33. Going back here, you get some support at 33 here from 2018. Yeah, so there's a lot of support coming up here. Put side for Newmont. If you sold 30, you get 32 bucks. That seems, again, fairly priced. You don't need to sell, I don't need to sell the put spread on this one. $3,000, cash secured. What's the dividend on this one? Dividend is 5%. Newmont is one of the biggest and the best gold companies in the country. Interesting. Big spike here in volatility for the March expiration. Earnings the 22nd of February, right? Confirmed, yeah, 22nd of February. So that's right here. That's for this expiration. Huh. This one's interesting. I don't know why. Put side, selling 30. Where's 30 on the chart? 30's right here. Tell you what, try selling one of these just for fun. If it moves against us, we got plenty of time. This will be very easy to roll too. Look at the spread. Spread here is 3 cents. The at the money spread is 4 cents. In the money spread is 3 cents. I mean, like if you get into trouble on this one, rolling, you could roll this one for the next 100 years. You'll have no problem doing it, okay? And it's a gold company. Let's go ahead. Sell 1 March 30 strike. Put limit of 34. Preview this. Again, need $3,000 to make this cash secured. Sell 1 March put 34. Limit to open. Receive a credit of 34. Everything looks good. We'll send that out. These two are hanging out here. This one is interesting. I'll go back one more time. You see I have this big spike. So the dotted line is the 30-day average of volatility. So all of these expirations are above average implied volatility. So that means these are more expensive than the past 30 days. And you have this big spike here for March expiration, which is the one we're opening. And honestly, I don't know why. It doesn't really matter. It just means that there's heightened volatility here, which means these prices are more expensive. Okay? That's all. So when you see all this stuff line up, we've got some time till earnings on the 22nd, and our chart, you know, we could be catching a bounce anywhere here between 30 and today. So I'm comfortable selling the put side. We got a lot of things lining up in our favor. Do I know the direction of any market? Of course not. No one does. But you kind of want to stack as many cards in your favor as possible. So if one or two things goes in your favor, you win. Okay? And hell, if I get assigned 100 shares of Newmont with a 4%, 5% dividend, sure. I think the bond market is yielding 5%. Is Newmont going to go out of business anytime soon? Probably not. Barrick will go first. Cool. I like this one a lot. We got 100 ways to win on this one. Next. Yeah, 71% IV rank for this is the 30-day IV rank. I don't know why it's so high. Maybe there's something I don't know. Baidu. Whirlpool we already looked at. Roku's coming up. I know that. We'll follow up with Roku after earnings. XLC. No. Airbnb. I think we looked at Airbnb yesterday, right? Pass. SMH, we have our position open already. Nokia, Sunrun, Chevron. Earnings everywhere. Too small. Home Depot on the 20th. We'll wait for after earnings on Home Depot. Lily's coming up. Okay. Let's go back to UPS, and then we'll go over these open ones, see if they get filled, and then we'll call it UPS. One more time. Let's take a look. Down still. Post earnings down. Like I said, put side could be catching this bounce from back in November at 144. If not, the next spot for support is, Jesus, right here at 135. Okay, what was the strike on the put side? Past 135, you need to sell the 135. At this point, since we're post-earnings, and the move post-earnings is pretty much what was priced in, there's no, what's the word? There's no edge on the pricing here, so I think we'll stick with these two. Close. Check this out. How about this? I'll make a deal with you. If over the next couple days, which we probably will, get some downgrades for UPS, this thing will continue to move down. If we get closer to 133, then we'll look at selling the put side. So UPS goes on the keep an eye on list. You know what else will bring this down? If we get a negative reaction from the Fed meeting, if we get a bad jobs number on Friday, UPS is going to move down with the overall market. So we'll keep an eye on UPS. I'm not crazy about it right now, but there's some potential. Okay, so review. Newmont, if this put gets filled, 34 divided by 2 is 17. So you will set a buy to close, good to canceled limit debit of 17 for this. It's just a put, not a put spread. Schlumberger, if this put gets filled, 44, that's 22. So set a good till canceled, buy to close, limit debit of $22. Okay? And again, these are both just short puts. These are not put spreads. Okay? Very good. The rest of our positions are all green today, so we're making some money. That's great. Good day so far. January's coming to a close. We've had a great January. Had a lot of wins so far. Okay? Cool. Tomorrow's Fed Day, so buckle up. Thanks so much for watching, everybody. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also, tell your friends to like, subscribe, and tune in every morning as well. Let's build this crowd together. We'll all trade options together, all right? Have a great Tuesday. See you all tomorrow morning.